Are you sitting comfortably? Then we'll begin in a few moments. We'll see if a few more folks make their way through the door. Hello everybody in the chat box. Crazy Cat, Serrera, Corey K, Theo, Go In to Win. Thank you very much for being here. We're going to look at SPY, SPX, VIX for the volatility. Before both though, we're going to check in with Medical Properties Real Estate Investment Trust, which was a fax request from Go In to Win. Hey Sputter, will you please look at GMRE for me? It has an 8.5% dividend next month. Can you briefly talk about some considerations to have when choosing dividend stocks to trade long-term or short-term? Thanks a ton. I hope you're recovering well. So we'll take a look at that stock and I'll give you really valuable advice when it comes to trading dividend stocks, when you're seeking passive income, and how to blend capital appreciation with passive income as part of your investment portfolio. So it doesn't look like we're going to get rushes of new folks joining, but when you do join, or if you've just arrived, say hello. I'll know a few more people are here and then I'll get going. We've got 5 concurrent viewers. I'm sure we can do better than 5. 6, 7. Is that 7? Hello, Lakeside. Hello, kitties. Got 7. If we get to 10, I'll start. Six, 5, down to 5. Well, we'll make it a quick one. Global Medical REIT, GMRE. This is a real estate investment trust. So those people who choose to invest in this type of asset are looking for capital appreciation when the stock price goes up. They're also looking for the dividend return. That is passive income for holding the stock. This particular ticker offers 9.5%. That's the dividend payout offered to investors. Those investors then who seek yield to add passive income to their portfolio might choose a real estate investment trust in order to capture that dividend. There's important considerations to take into account, such as the proximity to the dividend being issued. So will you be able to claim it? And has that dividend already been priced into the current value of the stock? With these type of REITs in particular, you're also advised to be aware of the net asset value of all of the assets held by that particular trust. In comparison then, that figure with the market cap. And a lot of people, under various types of conditions, such as the ones we're experiencing right now in the economy, would look for net asset value to equal the market cap of the real estate investment trust. Then they'd want to see the cash flow or the forward operating profits projections for this company trust to be able to facilitate the promised dividend. So you would investigate the likelihood of that dividend continuing. And one aspect of that is, does it look as though the company is going to be able to afford to pay it? And that might be because they've already locked down that cash. And you'd look to the previous history of the dividends paid by this company and see, is it always meeting the promise, or do they ever change their mind? And it may well be that in a large decrease in the value of a stock, that such as this, that then the dividend comes under pressure to also be reduced. So at this point, you're talking about a 9.5% dividend, and the net asset value of GMRE equals in at around $10 to $10.50, some estimates say, which is not that far away from the current price, though it is a considerable percentage move. So the conditions then at the minute that we're talking about that mean that the net asset value for this particular ticker are leading investors to compare that to the market cap and look for an equivalent figure rather than anything higher or lower, are because the reason that people would invest in a real estate investment trust when they're considering a dividend and that passive income, so they're seeking yield, will be compared against the reasons to invest in, say, treasury bonds. When the rates started going up on the treasuries, which meant that your risk-free investment was paying a higher yield, then the attractiveness of this particular asset went down. And when the attractiveness of the asset goes down, obviously the demand also goes down. So that was one of the reasons that price came down here. There were other reasons for the volatility in this stock, along with the overall economy, because it's not simply their ability to pay their dividend. There's also other factors to consider, such as the tenants of these real estate investments. So this is a medical properties trust, and therefore their tenants are medical businesses. The largest tenant was called Envision, and in the end of April there, they signaled that they were going bankrupt, which had a strong effect, despite the fact that the lease of these particular properties was acquired during bankruptcy. It had a really negative impact on share price, the rumors and the news pushing down the price of this thing, which put it into what people would have thought was a good value area to buy. It was also a golden pocket retracement, and subsequent to that area, 850 have had a big strong bounce, and the highs coming in around $10 and change. That was then the prior high that you'd look for in this formation once you zoom in. But that's the weekly time frame, and a general consideration that you should have when you're looking at dividend stocks. It would be, how robust is that dividend? Is it definitely going to happen? And the way you would quantify that is, what's the past history of that particular trust payout? And then you would look at how likely are they to do it this time, as in, do they have the money? And if they've already locked that money down, then you would say yes. That will also then be considered by everybody. Everyone in the market is aware of this information, and so the total value of the stock as the dividend date passes would lead to increased volatility. And this stock itself does suggest that it's in a period of volatility, what with a downtrend here being broken, and it's still not putting in a strong trend, in that this low, lower than the previous low, all of that lower than the breakout low, which became, after a high, breaking that downward sloping diagonal, and subsequently price action. It's got a big range. It's not trending in that nothing's confirmed with subsequent higher highs or lower lows, and certainly not in sequence. You're between two important moving averages, themselves having only crossed for the first time, and you've not managed to exceed any important Fibonacci levels. So there's no obvious swing entry on the go, and that would speak to the fact that this thing's then potentially in around a local oscillation high, that the environment is bearish, and that if there was to be further bearish news, it would be received very, very badly by the market. Bearish news and bearish trends would be very bad, and at that point you would probably think that this thing would come back down and put in a proper bottoming formation and test this previous low. As it happens, you've still suggested of the idea of a potential breakout, with it managed to exceed the prior downward sloping linear trend on the weekly time frame, then retest that formation before continuing its move back to the top side, though it hasn't exceeded this prior high at $10 and change, and getting beyond there and the current market conditions would be perceived to be very, very difficult. The only reason that might happen would be if this thing was to move up in a contrarian fashion due to the behavior of one market participant. So for example, it's possible that these type of things, often in these type of conditions, attract a large degree of short interest. Sometimes that can be very concentrated among few sellers, and if any of them have to close their position or get liquidated due to moves that go against them, then that could lead to then a buying event which pushes the stock price up. And in periods of volatility, these sort of events are much more likely than normal. So there are the potential for those sort of things to happen. Also, the reason that might happen would be news would be released that exceed expectations. Now, that is possible that the news could come out and exceed expectations. So, for example, the prior expectations on earnings were exceeded by 2,599%. You know, you can do that every so often. The actual revenue only went up by 3.25%. And sometimes the reasons for that in these type of investments is because the way they're run and administered, you can have termination fees, you can accelerate rental income, and you can, renewal of different leases increase the prices people are paying. There's obviously dodgy situation there with regards to the overall capacity in the real estate market, but these are the reasons why your revenue might exceed certain analyst expectations in periods of volatility that can lead to extreme moves. And these are the sort of events that you would need in order to take this thing back above 10.50 and $11. So bear that in mind. The capital appreciation on this particular stock is limited by those fundamental values. You can also see then on the chart the same thing, in that I described it as having gone essentially sideways, in that you haven't got a significant trend emerging here from higher lows and lower highs. This is very much sideways price action. On the daily time frame here, you can see it, the lows being tested. You've got higher lows on the RSI, price action not managing to do the same, so a touch of divergence. You've got higher highs, of course, across the most recent leg of the momentum, but overall not true. And so the thing isn't trending, and the momentum doesn't suggest it would. You do have amazing Rocky Outcrop flashes fills here. You should make sure you get that indicator at www.patreon.com/rockyoutcrop and select the indicator tier. So those are the things to consider. This is a fax request from a client who watches Tradespotting and is well versed on investing in various types of assets. This particular request came in to me partly because I do a real estate investment series on my Patreon channel. To my Patreon members, you can join that at patreon.com/tradespotting. If you're a member of Rocky Outcrop's Discord on the paid side using the indicator tier, then you'll get all of this stuff for free, which is a great saving. If you are looking to learn about real estate investment trusts and why it is that I would invest in these type of vehicles as opposed to the hard cold asset itself, then I advise you to check out my Patreon channel and get yourself on one of the tiers there. Right, so you're looking at this thing now on the 4-hour time frame and talking about the momentum. They got a strong push out of the bullish control zone when you were here most recently, having put in a divergent second high and what is potentially a failure swing, especially now that you've gone through the center line. There was a test back before the breakdown on the indicator that shows you breaking the center line, which makes it slightly ambiguous, but you can see that price action certainly looking to be rolling over at the minute. It's lost to 236 from this low and at the end of May to the high that we saw at the start of August. So this is a downtrend. It's lost the 50 simple period moving average to 200, comes in at around $9, and it might well be that's the sort of area where you see a significant enough percentage retracement that people get interested again. So around $9. Any lower than that, you'll be testing a golden pocket and a prior low. That's negative. It's very negative when you have not managed to exceed the prior high. So come in and test a prior low, not having exceeded prior, you're in danger then of starting a downtrend where you would classify these as lower highs. This is a lower low, and you'd be looking for an extension of this trend, this previous resistance, and if all of that breaks, then this linear downtrend support line, which is definitely possible if rates keep going up. To refer back to that point we made on the initial weekly view, we could see that in these types of environments and the circumstances we're seeing at the minute, the higher for longer rates are going to have a punishing effect on the demand for this type of asset. Another problem that's unique to medical REITs at the minute is the glut of office space that has opened up post-pandemic recovery, and the more people working from home, which has left spare capacity in the real estate investment market in general, and the required capital expenditure to convert offices to medical property isn't exceedingly, it doesn't put it out of touch for most of the companies that would look to branch out and diversify who currently hold just office space. So there's opportunities there for less specific REITs to provide the capacity that might be required by companies who don't want to pay increasing rent on their current lease. So there is dangers there that are presented in particular and uniquely to companies like trusts like GMRE and other large medical real estate investment trusts, of which there's a couple. We've got a big watch list, and a lot of them we check out on the Patreon series, so definitely have a look there. So this was a fact request from a fantastic chap who watches the show and made a donation so that I would do this video on this particular ticker and explain those concepts with regards to capital appreciation and passive income. So the particular circumstances that are relevant right now alongside the general knowledge that everybody would benefit from knowing. So then we'll zoom back down to more closer in here with price action, and we'll look at this most recent move, and we'll remind each other that you've exceeded this prior low, put in a lower low that comes off the back of a divergent high. You are in the bearish control zone, so I don't like arguing with the current direction of price. Having lost both moving averages, I suggest that you're in danger of continuation to the downside, and as traders that's what we would look for. I'd also say though that you have managed to put in a test of the top side of a gap in at around 950. That's where we are at the minute, and that you do have gaps back to the top side. You're also reaching a diagonal, though we're on the 1 hour time frame. I don't too much stock in that. It's all about where price intersects with previous horizontals, and if that's also at the x-axis where we meet a diagonal, then it might provide us with a degree of confluence, but in and of itself we can't take it as a signal. And now when we see the fact that there are potential retracement areas back above, including important Fibonacci's of the breakdown, and having already exceeded the prior low, we could come up now and put in a right hand shoulder on a potential head and shoulder, that being the right shoulder, this being the head. This is obviously the previous move, and if that does coincide with a failure at the center line on the RSI, then I would expect price action not to really exceed these levels at $10 and change, maybe 10.20, certainly not exceed 10.50, come back down, at which point you'd be looking at the potential for a large dip and a measured move that matched this head and shoulders formation. Could take you back down to the low side of this trend and into those areas where we're talking about sideways price action. Test the previous lows again. 4 hour time frame. May well be that you're coming in, putting in this sort of a formation, putting in this prior low, exceeding that. What with this being a lower high, you're back to that potential area of an 886 retracement, or even lower, in at around high $7 and change. So it could well be that this thing drops back to those areas, and it certainly is that this is where you would then, based on the current formation we've seen on price action and technical analysis alone, you'd say that this is the lower risk area because you're able to manage it with a stop immediately at 780, 770 levels. If you're looking to buy it, then you get the lowest risk by managing the potential loss at that zone with a very close stop loss. And the area where you'd like to take profit on this thing would be any of these previous support levels now coming in at resistance and prior highs from important closes on significant time frames. So that would suggest that the best value entry on this thing, on the technical analysis and the fundamental analysis, is to wait for potential bad news for the Fed, driving the price down further so it's in good value areas, being cautious not to hold it below important levels here at support, because bad news from the Fed will affect the economy in general and might mean that some of the leaseholders that provide revenue to this particular trust then go bankrupt themselves, as we saw with Envision at previous peaks, and how that could have a very strong downward pressure on price action here, especially in volatile scenarios, especially when you're about to potentially confirm a downtrend. If this thing would break, you wouldn't want to hold it, but it does present the best value opportunity to enter. And then your target, like I say, these resistance levels on the way back. I'd also be cautious if this was a lower high of the potential for this thing to put in a descending triangle and stretch out this potential bearish situation for slightly longer. So until such times as you've had 3 touches of both, that would necessitate a top touch back again, having come lower than we are at the minute, and then potentially a 3rd touch down, which would be significant because that would confirm this bearish structure on price action, which subsequent to this peak and this low might suggest that in order to get really good value entry, you're looking at a double test of this low, and like I said at the top of the show, a proper reversal formation and a proper bottoming on price action from a technical perspective. So that is the top to bottom, long and short, of real estate investment trusts with a specific focus on global medical REIT Inc. Thank you very much for the fact request. If you'd like something similar, the links are in the description below. If you'd like to follow along with this series more consistently, find me on Patreon, www.patreon.com/tradespotting. Thanks very much for watching. Hit the like button. Hit that like button. Now we're on to SPY, and we'll follow up with VIX analysis, then the polls section, and then super chats and any ticker requests that come in via donations. Chat box could be a little bit more busy. I have done quite high level analysis, which would be interesting to most people and difficult to articulate and conceptualize all those concepts live on a show. But I see that I've also put in by far and away the most messages in the chat box during that, while also running the polls. So, aren't you a very lucky audience? It's difficult though. I mean, if you've not got fingers or a brain, maybe you find it difficult. Plenty of nice people in the chat box to say hello to, though they themselves are a little bit quiet today. So this is SPY, and you've put in this bearish formation. We talked about it before with the resistance level creating a downward sloping wedge. The measured move took you back to the prior weekly, put in the prior weekly high, didn't exceed the 236, and at that stage you knew the continuation was on the cards. You can now extend that downward sloping resistance line, and I would put a little bit of focus on that ahead of the support line, that which we're at the minute, because this support being a diagonal and on a 1 hour time frame, the truth is you're actually looking at the horizontals. You've closed this gap. We spoke about that, the likelihood and the need to go a tiny little bit further from the prior low. You never managed to exceed that resistance or the 200 period moving average, never mind 236. So slipping back down, test this golden pocket, having closed the gap, that's fully expected in around 440 on SPY. Any lower than the golden pocket, you'd be looking at 786, 886 of this prior move on the 1 hour time frame. That would take you back down with a proper test of the macro support. On the 4 hour time frame, you can see the 236 comes in around those levels at 438, which would be where you would anticipate seeing a little bit of deceleration in any extreme move, which would be possible because this is a potential support area having closed the gap. And if you don't bounce here, you will break this formation, come down and test a significant horizontal. The first one's at 438. You also see in the 4 hour 200 period moving average comes in at 382, which is very close to another gap, a significant one on price action. Getting there would be testing prior highs from previous formations. As you can see, we've got it drawn in, talked about the potential support area. You've also got this guy, which is the previous oscillation ahead of the breakout move. So it could well be that you see tests of those areas and significant tests of important moving averages and closing gaps. Now, if you go any further, you'd be talking about potential retracements all the way down 50%, or filling all these gaps down at the golden pocket on the retracement based on a 4 hour low to high, where you would be crushing price action at this stage, way down, testing 400 again, And the ambiguity with regards to trend would be back on again, because when you look left, you know, this is effectively a lower high than the all-time high, of course. And then you were looking at this low. It's only really got one significant one before the beginning of this trend. So if the retracement on this move, if this linear trend to the top side break is confirmed with a move below the 236 that doesn't stop at a 200 period moving average, I don't think you would necessarily stop at a golden pocket, and you'd actually be coming back down and testing important lows again. Volatility would be back on the cards, and you'd be looking at SPY at 388. What would happen then on VIX? Well, you've already come back up and tested the downward sloping resistance on this 4 hour. It's this channel we spoke about for a very long time. We were looking at that as support. It's now resistance. You get your 200 period moving average, and that's roughly 200 bars, where you can see the average price as represented by this slightly pinky rose colored section of crosses. That's your 200 period moving average, and the average price then will take as a mean for this is in around a golden pocket retracement from the current move to the top side, which hasn't managed to exceed in itself its own high. So you'd be looking at a continuation of this formation, volatility as measured by the VIX increasing, and that all in and of itself in its own ticker increasing, but actual volatility across SPY decreasing. So less contracts out of the money would be in the nature of SPY finding support and moving to the top side, and VIX then moving back down, testing 1460, 1469, 1450, these sort of areas. So if SPY moves up, you'll see VIX find resistance here where it is at the minute, and despite the fact that this has put in slightly higher highs in the most recent oscillation and made its way back into the channel, it then got rejected and found support at a moving average which had gone through the 200. So there was a positive cross on the 4 hour time frame. It tested the 200, and that was a confirmation, but price would need to exceed its prior highs now in order to confirm this positive move to the top side, at which point you'd be looking at VIX test in 2021. So if SPY does break down, it probably breaks down quite a lot, because it's very unlikely that VIX, having found positive test of the moving averages, crossing to the top side, recovering its previous channel, you'd be facing the concept of displacement, as Rocky and I detailed when we added it to the body of technical analysis, that knowledge that is part of the course. You're looking at this downward sloping channel and a basis line test, prior highs was the formation that you were previously in, and then continuation and moves to the top side. So if VIX does break up at this stage, the targets could be quite high, and that would be representative of SPY falling back down again, testing 420, not managing to potentially not holding it. I suggest you get a bounce and price action will slow down there, and you know, back above it, test of the 200. But if you're looking at continuation, golden pocket retracement, 786 moves to fill all of these important gaps, and then test of these prior lows, which are really important. And that sounds very complicated. We've put the theory together that makes it all make sense in terms of a story. But you could just say simply that you have a downtrend here, that in this downtrend, you put in low after low after low after low. The break to the top side has managed to exceed an important level in that previous downtrend, but it didn't challenge the absolute top. So it then constitutes another lower low. And if there is another lower high, then the next question on the cards is, will there be a lower low? Obviously, that could be arrested at any of these important areas, as we detailed on the macro and the micro. But if it isn't, this is the low you're testing, and it's a downtrend, right? And ultimately, that would look like a potential double top. This, you could say, is potentially would be an Eve and Adam. Typically, you would see that at the bottom, but it is what it is, and if it falls back down again, then that's the theory. So from a simple top-level macro perspective, there is the potential for price action to move back down at pace, break important levels of support, and horrify everybody who had made the determination that we were in a bull market, when clearly we aren't, because we haven't exceeded this high. We are in a bullish trend in that you've got higher highs and higher lows, but that is about to be questioned, as we've already reached one of our previous higher highs. And you compare this on the macro level, it is lower than this guy. So that's SPY and VIX. So a good take on things there. And then the polls that we were talking about previously. And then we'll get on to the donations, super chats, and then the ticker requests. Do you aspire to own a property portfolio? This was the first poll that we did during the real estate investment section at the start of the show. We had 7 votes with 57% of people voting yes and no, 42% of people. It is a vehicle that people who have been famously wealthy throughout time have put their money into. So it has been traditionally something that people aspire to, though I'd say that that's quite a low sample size. It is significant that 42% of people aspired not necessarily to do that. I think that part of the reason for that being such a divide there in the audience is because a lot of people here know the value of cash and trading to generate an income. So the flexibility of not being tied down to any one geographic location is also in and of itself its own benefit. So that's interesting. My personal take on things is the best of both worlds. I'd like to be footloose and fancy free and own property in all the European capitals, loads of different ones at old towns beside beaches, and then a big brownstone in New York and a massive sprawling mansion in the hills of LA, which I would give all of it away when I died and have all my friends come and stay all the time and teach them how to be the best traders in the world in. So that's my response. The next question in the poll was, do you think debt is a bad thing? We had 75% of people vote no, I use it to grow my wealth. And yes, I hate debt, 25%, which represents quite a clear demographic split in my audience, with about 75% of you guys being in America, where credit would be the term used rather than debt, and using it to increase your ability to access further credit and generate a velocity of income through your own capital expansion and your own endeavors and an entrepreneurial spirit is much more heavily ingrained in the culture. Whereas here, you know, where not so long ago, I myself had an enforced stiff upper lip, and we're all used to being serfs, turfed about, driven out of our homes when they need to get some more, squeeze the margin on the sheep and whatnot. You know, you'll know about it if you were part of the Ulster plantations, or if you were then part of the displacement in Northern Ireland, which caused the civil war there, or subsequent massive immigration to America, which is where so many of the Scottish-Irish cultural beginnings came from. So what do I think about that? I think debt isn't necessarily a bad thing, but it can be very tempting to people who are in desperate situations, and the administration of debt is very unethical, and the overall question, it depends particularly, I think, that one on the person. I just think that's partly why the split reflects similar demographics. So that's the first 3 polls. And the final poll, have you ever traded on leverage? Yes, from time to time, 40% with the vast majority. Yes, I use it regularly, 20%. So overall, 60% of the audience do already trade on leverage. And not yet, but I aim to is a further 20%. So on total, 80% of people positively inclined to the concept of leverage. Obviously, it's inherent in various investment vehicles, such as if you're trading options, then leverage is built in. If you're trading some types of tickers, for example, compounding ETFs, then they themselves are constructed using a complicated series of swaps and leverages, which mean that you'll be trading leverage even if you yourself are on a cash-only account. It's there somewhere in the machinations of the things you trade. And of course, everybody trading against you, including the exchange and the broker that take your orders, who like to short their own clients, will be utilizing leverage. It, again, like debt is why another word is leverage. Leverage and debt are all good if they're used for capital expansion when you take on increased capital flows. If instead you squander and waste that money, then when it comes time to pay it back, you won't have increased your capital expansion, won't have occurred. So there'll be no increase in your overall revenues to account for the increase in payments that include the interest on the loan. So if you're going to engage with the concept of interest rates, then you will be on some level interacting with debt. And even if you don't trade on leverage, if you live in the West, you live in a leveraged society, which is why we face boom and bust periods in the economy. So 10 votes on that one. An interesting polls. Thank you very much for everybody who take part in that. And let's have a quick look and see what the super chats or donations that came in. There was none of them, but it was a great idea to have the polls to fill in for that. So this was a fantastic video. I think it lasted for a significant amount of time. It provided huge value to everybody who was willing to engage with it. I'm sure it was worth at least a few quid off each of you. So find your way to the link in the description and make a donation and keep the show going. Thanks very much. See you in the next one, if those things happen.